Hello everyone, I'm your host Amartya Singh, co-founder and CEO of Inflow, a product built for modern finance teams. Welcome to the next episode of Inside the CFO Office, where we focus on the role of CFO in fintech firms. In the podcast, we explore the journeys of finance leaders, discuss the challenges they have overcome, and gain insights into the future of finance. Today, we are delighted to have Subodh Karnad with us. Subodh is a CFO at various fintech firms with over 20 years of experience at Fortune 200 firms as well as high growth venture backed firms. His impressive career includes pivotal roles at organizations like Common, Travelex, Nokia, PayPal, Visa, and Wells Fargo. Known for his analytical prowess, value creation, and trusted partnership with CEOs, Subodh has consistently built high performing teams and driven financial rigor across various sectors like fintech, payments, e commerce, and marketplaces. I've had a great discussion with Subodh as well, and multiple discussions of the problem statements and the processes, the journeys of finance teams. And we're happy to have Subodh with us. So join us as we explore Subodh's remarkable journey and delve into the nuances of CFO roles in firms, especially in the fintech space, and discuss how technology, including AI, is reshaping financial leadership. So let's dive in. Welcome, Subodh. Happy to
It's my
have you with
pleasure. Thank you
us.
so much.
So let's start with the first question, and it's a little bit personal question. And I've seen your experience, and we have talked about it, and you have grown from finance manager to a CFO role, right? So how has been the journey, and what were the major highlights of your journey and the learnings that have come with your journey?
Yeah,
We'd love to
definitely. I
know about
think
that.
I think it's been a journey of growth, as you pointed out. I mean, the titles aside, right? I have really experienced a lot of growth over the last 20 years that I've been in business. And if you look at my experience, it has transcended companies of various natures in various stages of growth and evolution. I've worked for big companies, I worked for small companies. I worked predominantly in the US, but also had a lot of responsibility outside, and I've had the opportunity to support some really solid world-class leaders and learn from them over a period of time. I've also had the great opportunity and privilege to manage and lead exceptional teams and exceptional talent and help them grow. And also, if you've been in business for so long, you also get a front row seat to various global events, some that are not very pleasant. Like for example, when I was just starting out my career, the dot-com bubble had just burst. So that was an experience. And then from there on, the great financial crisis and how do you lead through that? Because that was all of a sudden. And then, of course, you have had, other events like COVID. Most recently, we had the mini Silicon Valley banking crisis. And now we are, I
Yeah.
wouldn't say at the cusp of another crisis, but there's a lot of uncertainty in the macro environment. So there's a lot of, things that I've been able to learn and grow. And titles aside, the journey has been fascinating. I would never trade anything for that.
Right. Great. You mentioned about the three crises which have happened: the dot com bubble, and SVB crisis, and COVID happened, and in between, a lot of short term, crises have also happened across the life cycle, right? And as you mentioned, getting a seat right there to view the problems up close and personal is a different kind of experience. It's a humbling experience, and it gives you a lot of a lot of maturity to handle such situations. And obviously there are two sides of it. One is, I think, as finance leaders, one is the growth driven vision, like where you're saying that this is the growth that the firm needs or wants, and how to balance it with a financial oversight or financial with a financial backing of what you need to achieve. And obviously there's a crisis things, which basically targeting something, and when a crisis happens you need to take a back step, and you need to plan accordingly, and regroup and do it again, right? So I mean, great to know. And I think as we step into deeper into the podcast, I'm sure that we'll come across such experiences of yours. And moving on to the next question, we would love to know about, you have been at Common, and you are a leader at Common, and we would like to know how was your experience at Common? What are the most significant challenges that you have faced, and how did the challenges influence your
Well,
approach to the
experience was
leadership?
fascinating. I mean, that was my first kind of CFO role at a venture-backed startup. So there was a lot of learnings that I had to go through. At the same time, I was bringing in a lot of experience as well from large companies in terms of processes and systems and culture, leadership, right? So it was an interesting paradigm. In terms of challenges, I think there were two challenges. One that we identified early, and one that we didn't know when it was going to happen, but we kind of knew it was going to happen. So the first challenge was a fundamental business model challenge. Common was a full-scale property manager. So they were bringing in technology to the old business of managing residential buildings. And the biggest challenge there was not demand, because we had plenty of demand from renters. There were a lot of people who were looking to rent, and they would come to common site and wanted to, fill in applications and what have you. The problem was supply. So how many new buildings are coming online that we could bring into our network and then bring them as part of our marketplace? And if you look at that industry, you don't see a lot of new buildings come up every day, number one. And number two, even if they do come up, there's a long gestation cycle in construction. It's not like building a software or something. By the time you get permissions, you build the building, you get it ready, and you start to rent it out. There's a long gestation cycle. Many of the buildings in our portfolio were coming online 2, 4, 6 years out, and we were a venture-backed startup. So we had cash burn, right? So that brings me to a second problem that I talked about, which was because we were a venture-backed startup and we had this business model challenge. The question really was, how long were the capital markets going to be friendly to us? And that window was very short. At least I could see that, because having lived through all the prior crises. And it closed pretty quickly, because once the funding windows closed, they closed very, very quickly. So by late 2022, it was pretty evident that the Fed was going to increase interest rates, that the funding was going to dry out, the VCs were going to take a step back. Generally the perception of risk on was going to kind of move off to risk off. So those were the two challenges: macro level and micro level, business model driven. But other than that, the experience was fascinating. There's a lot to be learned, I think, especially when you work for a relatively small company after you work for many, many large companies over the course of your career.
Right. Yeah, I mean, two great points that you articulated. One was the entire issue of having a supply gestation, right? Them taking a 2, 4, 6, 8 years to come in. And I know how VCs work, right? I'm in a similar space, right? I mean, there is a certain level of demand, a certain level of growth that is expected in a VC backed business. And that growth has to be fast, has to be quick. And because you need to keep growing at a particular rate, hence you need the funds, hence the need of a quick growth, right? So I actually understand where that entire thing is happening. But from that perspective, how did you manage to convince me? Maybe we can't get into too much details considering that we have a limited time, but we just love to know. I mean, it must not have been easy. You have VCs at a particular site, you have the business demand, you have the supply. Business demand is fine, as you said, you had a strong demand, but the supply side has its own challenges in terms of meeting the demand. But how did you manage the requirements of a fast growth from a VC backed thesis vis-a-vis the supply? How did
No,
you
I think,
manage
look, I
that
mean,
problem?
the company was already operational for about 4 years when I joined, and our founder was amazing, and the founding team was very amazing. So they had a lot of credibility and built a lot of, relationships with VCs. And our VCs and our
Right,
board was pretty long-term focused. So it was not like they didn't know what the problems was. The problem was not our existing leadership team or the existing VC base. It was when we were targeting a new VC base, a new group of investors in a very dramatically changing market.
right,
So when you start to make a case about your business, it becomes extremely hard to convince them. And that's where the challenges really
right.
started. But we had extremely committed leadership team and extremely committed board that we never had to really, worry about at the time.
Got it. Yeah, I think, I mean, as you said, the initial VCs, the VCs who had supported you, there's a certain level of understanding in the business, but we are also seeing that once fast firms start growing, it requires a certain level of VCs to understand that, your business model and be ready to invest. And it's not an easy and straightforward to find that right fit in the VC. So it's a VC, form fit that is required. And with the markets changing and macros changing, it also becomes a little bit more difficult to convince a VC to come on board, right? I completely get it. And the markets have also been changing, and the VCs, I mean, there is a founder friendly market, there is a VC friendly market, and it keeps on happening in turns. And I totally get it, the problem statements that you are saying. And I can believe the immenseness of the problem is huge, right? It directly has an impact on how the growth is going to pan out, how the cash flows are going to pan out. But I'm sure, I mean, your value over here is also a lot into terms of strategizing and forecasting what you need to do and giving that confidence to what kind of cash flows are you looking at to the to the investors.
Sure.
Great, thanks for answering the question. So let me move on to the next question. And you also mentioned that you've worked in big firms, you've worked in enterprises, you've worked in VC backed firms, you have worked in as big firms as Nokia and PayPal as well, and you've worked in startups as well, a common and I've seen both sides of the business, like from an enterprise side and from high growth VC backed firm, like a startup kind of a role. So how have you seen the challenges changing from it? Number one, how is approach? Is there a change in approach with which you lead your team, or you guide your? I mean, I'm sure it's a very complicated question. There are multiple angles to it, but we'd love to know your take in it in the
Yeah,
limited
I
time
think
that we have.
definitely, right? They might look similar and they might look different depending on the perspective. I personally believe the differences are a couple of
Right,
ones. I don't think large companies, no matter what the crisis, have most often than not, they don't have an existential question, right? A PayPal or a Visa or a Wells Fargo, they have weathered the most dire economic crisis or challenges, and they're still around and keep getting stronger. Versus if you look at VC firms, young firms, emerging companies, they are basically, they're living quarter to quarter or year to year in terms of making sure that their business is established, they're growing, they're making a case for new funding comes in, and the cycle repeats until they get to a point where they are self-sufficient. And if a crisis
right,
happens, then there is an existential crisis. They can actually die. And you know it, you're in the startup business. A lot of companies die. We don't hear a lot about them in the media. We talk about, high valuations and success, which is the right thing to do. But there's also failure out there. So I think that's different, number one.
right,
Difference number two is the doing versus thinking, right? So large companies take a lot more time to think and plan and strategize and do all these kind of many multiple planning cycles, which is the right thing to do because they have very sophisticated investors and boards to answer to. Small companies are more execution
right,
focused, right? So they got to get stuff done very, very quickly and get it done. So there's a lot of trial and error. They say move fast, break things. I think that is actually applicable. So there's an execution driven environment there as well. So I think those are two differences. And last difference I would say is resources, right? I mean, in small companies, you cannot expect to have too many resources, financials or otherwise. As a leader, you'll have to get your hands dirty and get into the details and do stuff. In larger companies, there are a lot of resources, both your own team plus a lot of support resources. And then if you run out of them, you can also access external
right.
consultants and advisors and what have you. So that's a third limitation that small companies might have relative to large companies. Yeah.
Yeah, I mean, great answer. I think the first point completely agreed on, with regards to the life cycle of a company and, the kind of way the businesses are run. There is no need to plan quarter to quarter, year to year. There's a certain level of stability in which the company is running. And it's all about stabilizing the business. And it's linked with the second thing, right? There are not a lot of risks that a large company takes. And even if there is a certain level of investment in, let's say, separate product or a separate business unit or separate geography, typically the approach is to start small and then incrementally make it bigger and bigger. And then out of five ideas might work, and that will work really, really well. But on the other hand, if you see the startups, they invest a lot more time and energy. There are a lot of risks involved. It's more execution based, lesser planning, because when you're running a startup there are a lot of uncertainties around what you're doing. Hence there are a lot of trial and errors that happen, and hence there is a risk involved, and hence you want to just
Mhm.
get the product out in the market so that people can start using it, and hence that gives you that kind of a feedback. And the third answer, I loved it with regards to the resources. That's a big difference, right? The way a company goes about planning a particular product, there are, as you rightly said, there are 3 to 4 people who are just for research, right? In a startup there's no research. You just do it or don't do it. You just have to break things very quickly and make
Mhm.
mistakes, fail fast, so that you can succeed. I love the answer. I mean, it's your own experience, but I'm also sure that you must have also seen these things when you're working with your leadership team, right, in both the companies, right? And is that also a difference in the way they approach the problem statement, and how has been your
Oh,
experience in working with the leadership team at a startup
100%,
vis-a-vis
right? Because
enterprise?
in a larger company, you're talking about seasoned corporate executives, and they bring a certain style, a way of thinking, a different way of approaching a problem. In a startup, especially if you're at a C level, the person who's leading you is typically an entrepreneur, right? And they come with a different
Right,
approach, a different mindset, a different instinct, a different emotional connection to the business. So the learning parameters are very, very different. Although the principles of management may be the same, because you're still leading people,
right.
managing P&Ls and being accountable to investors. The people, the characters involved in the story are dramatically different. and as they should be. You don't want seasoned corporate executives coming and leading early stage startups. That's a risk. At the same time, it's always a pretty big risk if you put a high voltage entrepreneur, unless it's Elon Musk or someone like that, into a very
Right.
storied company with a long history. So it's definitely
Right.
different. The thought process are different. The speed of decision making is different. The
Right.
level of risk taking that you do is extremely different. And even the teams are very different. Leadership teams are very different. I think in the startup environment, mostly people are entrepreneurial. In a large company, again, they're more like seasoned professionals, and incentives are different because in large companies, people are mostly optimizing towards, okay, am I going to get promoted to the next whatever that level is? In a smaller company, people are like, how can I grow this company and get it to exit? Or, it's because it benefits the shareholders, it benefits me as well personally because I'm vested in so there's definitely, I
Right.
mean, it's night and day in some ways.
Got it. Thanks for answering the question, Subodh. I think let's move to the next question, right? And I mean, this is a very important question from a CFO perspective, right? And you covered it kind of a bit in in the way that you mentioned that with regards to the crisis happening, and we had also talked a little bit about your experience at Common. But love to know, there are viewers who are watching this video. What is the single most important quality that a CFO must possess in today's dynamically, changing landscape, right? And so, why is that particular quality so critical in
Yeah, I
today's
think
use
the
case?
way I would answer it is, I'll tell you what the single most is, but I'll tell you how it sort of builds up and how that actually process works in my mind is the single most is to be a valued resource and a strategic partner to the CEO, a co-pilot, right? That's the single most skill that a good to great CFO must possess. There is no second ways to do that. And same way, being a valued strategic partner and a resource and a sounding board to the rest of the leadership team, right? How the CFO gets there is a little, kind of has different moving parts. One is the way they get there is one a
Right.
CFO in these days, to your point, this is a great question. You can't just be focused on numbers because that's a given. You got to know your numbers, but you got to be extremely business savvy. You have to understand the business really, really deeply. Number one. Number two is you got to have a very good leadership skill. So you have to be a leader because at the end of the day, you are leading the finance organization. And as a CFO, you're depending on many other experts, subject matter experts in your company, in your organization to make things happen, right? So you have to be a good leader of people, be able to identify talent, nurture them, help them grow so that they can enable your organization and the rest of the business. And the third is a CFO
Right.
also, in my mind, must be externally savvy. So there are two parts to it. One is how do you manage all the external, stakeholders, investors, I would say board to some extent. So, you could call board internal, but I would say, if board is also an external oversight committee, how do you manage new investors?
Right.
How do you manage auditors, regulators? And above all, how are you keeping your ear to the ground when it comes to macro events? What's the funding market looking
Mm.
like? If you're up to speed on what's going on in the banking sector and how does that affect your company? Your customers, do you know if your customers are financially sound in a tight economy or are they going to go under? Things like that. I think it's
Right.
it's an all-round skill, but all that has to add up for a CFO to be an extremely good, strong, solid strategic partner to the CEO.
Got it. But I think, I mean, one important point, and I completely get where you're coming from, and that's really a brilliant, takeaway from that particular quality, which is being a CEO's co-pilot. Because, I've seen, from running a company aspect, right? Typically, what happens is that, you're growth oriented, you are like, a little bit cost oriented, and you're a little bit, investor oriented, or, you want to have your board aligned with your decisions. And obviously, there are multiple other angles of administration and vision, right? One thing that gets missed out is the entire angle or importance of finances, right? How your finances are being handled, how your cash flows are being handled, how is your finance team actually enabling the business team, tech team, ops team, admin team? Are they enabling that or elongating the processes, right? And that's very important, right? And I believe being a to CFO makes a lot of difference because when you are co-pilot to the CFO, there is a strategic angle, there's a vision angle, there's an operational angle which you are trying to solve, and there is a cash flow angle, so that any kind of mishaps happens, the cash flows are in the right place. Because otherwise, a CEO who is growth oriented, they we do not plan for mishaps. We plan for the highest level of growth. Hence, we want to invest more time and money into the current resources to make the most out of it, right? But there is a need of somebody like you who can come and tell the CEO that, hey, this is what you're planning, great, but this is what might happen, and hence we need to have a specific reserves, maybe cash reserve kind of a thing, or we need to go a little bit low, or we can go further high. And that's very important, I believe, rightly
Yeah.
articulated.
If
That's
I
a
may
great
add one
quality to
more
have in this.
is, and I think you touched on it and I probably missed it, is a CFO needs to be an extremely good storyteller, you know, because if I go to the CEO's office and
Right,
say, you know what, here are the financials and here's how the business did last month and now it's going to be doing that, he's going to say, what does this really mean for me? You know, or same with any investor
right,
who's a growth investor or who's a hedge fund. And I go and tell them my company is great and it's the best company in the world. And like, that's okay, but they're going to come at it from a different angle. So you have to also be able to craft a story because
right,
finance for 95% of the population on this planet is a foreign language, right? And the CFO is best
yeah,
positioned to make that translation depending on the audience. So I think you touched on it, and that kind of reminded me
right.
what is one more other skill I would add to that package, actually.
Right. Right, right. No, I agree. I mean, even if you look at something like an annual report kind of a thing, the management commentary is actually looked at for a specific summary, and where actually everybody can understand it better before going into the nitty gritties of a financial statement. So that completely makes sense from a storytelling perspective. We'll have to move to the next question, and this is one of my favorite questions. I love how technologies have evolved. Finance teams are much more tech savvy in terms of embracing new technology, want to apply new technology, want to have more automations around. So, would love to know your take on ERP systems like SAP, Oracle's, Microsoft, JD Edwards, and so on and so forth. I would love to know what are your thoughts on the effectiveness of the current ERP systems and financial softwares in general. Are they meeting the needs of modern finance teams, or you believe that there are some things which need to be worked on in the current ERP software platform?
If you ask me, are they doing the purpose of, collecting information, doing sort of human oriented processing, like human determined processing, and then providing the information back in terms of financial statements that satisfy the needs of management teams, regulators, the SEC, for instance? I think yes, definitely today's environment, they are, I mean, all the big names you mentioned, and even the smaller names like, NetSuite as a product from Oracle, they're doing the job. The question is not if they're doing the job. The question is how they are doing their job. Can this process be more automated? Can you add more thought? Can you add more intelligence? Can you add more predictive abilities? And that, for most part, hasn't really happened for the last 20 years for a variety of reasons, because we have been platform shifting. Right? We went from PCs, then we went to the internet, we went to mobile and cloud. What that has done is it's only given more access to information, which still has to be pulled manually, and manipulated manually and analyzed manually and then presented back. The question really is, what's the next paradigm going to look like? Is this manual interface going to kind of go away and you've got more intelligence coming into the system? I think to me, when I look at current ERP ecosystem and where it could go, that's the real gap in my mind. Uh, where it
Got it.
goes is probably you're the best person to kind of assess because you're in that business itself. But I think that'll be interesting to watch, really.
Right. No, I agree. I mean, from the perspective of the finance technology, right? I mean, there are multiple things have happened over the last years, especially last 4 5 years. One change, big change, has been the entire data, right? Data has increased and beyond proportions, right? There are so many technology softwares that are being generated. Each software is leaving its own database, its own transactional data behind, and now there are tons of transactional data from these many softwares which firms are using. And there's a lot of need for the data to talk, to give you certain level of evidences, as you rightly said, making the processes more intelligent, building learning models around it, and making more predictable, right? Predictability is one thing that many firms are underestimating it, right? Predictability gives a lot of cushion, right? Because in times of trouble, the predictability is what holds you in the right state. Predictability helps you to manage your growth plans, as well as how you're planning your resources or planning your cost. So I think I completely agree with your point that the processes, what is required is for it to be more automated, for the processes to be more intelligent and for the process to be predictable, right? I mean, that's I think is the future of finance systems, and it has already been happening since quite some time, but I think it's going to pick up with the next round of growth. And that brings me to the next question, right? And I'm sure that you are also excited about how AI is being used and how AI can be used. There are so many things. Obviously, there's also a need of caution as to how AI applications will be there. But I think we have not yet reached that stage where we actually maximize the implementation of AI. But what is your take? I mean, I know you have been in industries, you have been in as big industry in PayPal as well. When you were in PayPal, maybe the AI has come a little bit later, but I'm sure you must have heard the AI implementation application throughout a metro from since a long many years, and it must have accelerated right now. So, what is your take on application of AI? How do you see the AI
No, no, I think,
vision
look,
panning?
like I said, the platform shifts we've seen so far have, to your point, increased the availability of data. I mean, at a time when, I had to go to the office, and this was way back when, to access a P&L on an office computer, to having a laptop that connects directly, to having that information on my mobile phone as and when I wanted it. Access has increased. The question really is the thought, the analytics behind it. I think that's where the AI is going to kind of play a very important role, right? I'll give you a great example, right? Today, if I look at a company and say, what is the book value of company X? In the old days, I would take financial statements and plug them into a spreadsheet and calculate it, right? Today, I just have to ask any large language model and say, what's the book value of company X? Then I can prompt again and say, okay, how
Right,
does it compare to company Y? And it will give me not just that, more
right,
context. Like one interesting prompt I did was it gave me context about book value because I had a company that I was looking at and the book value was lower than the market value. But it gave me context like just because it's lower than the market value, don't take it for a gospel, right? Because it could be fundamentally something wrong with the company. So I think AI is going to take a big form in terms of transforming processes and ways which we are doing it. And there are so many applications, right? From the front facing where the FP&A and the analytics, I think that's one part which I just mentioned. But at the back end, processing of transactions, credit risk monitoring, accounts receivable, automation, accounts payable, any kind of compliance related alerts systems, competitive analysis, pricing models. I think those are huge because that's where the AI can be very, very helpful in terms of kind of telling you, okay, this market, this price, this is what happened and how quickly it happened, and this store, and this is what the AI is going to kind of give you information on whether this store is better than that store, or why did you do this marketing program and what did that do to you versus today everything happens, but it happens more manually versus push button. So there is just an ocean of applications. I think at this point in time, I look at AI and say we are probably how mobile phones were in 2002, 2003, right? So we saw the BlackBerry, but we weren't quite sure how that's going to transform the mobile ecosystem. We don't know yet how
right.
AI is going to really morph, right? But it is definitely coming. It is definitely here. And it's definitely going to be very, very transformative to how people work, how finance functions work, how you staff people, what kind of talent to bring in. It's one of the biggest
Right.
shifts, I think.
Right. No, I completely agree. And I mean, you have added a lot of other points also, which are very interesting. One is the pricing model aspect. I love that entire explanation or entire understanding of how pricing can be worked out. And we spoke about how we are using AI for credit risk and accounts receivable. And we also, I mean, there are also multiple cases of being used across the CFO tech layer. One, as angle you mentioned, as FP&A. FP&A has been really, really been transforming since quite some time, the last 3, 4 years. And with AI coming into the picture, LLMs coming into the picture, the kind of learning that you can build into your FNA practice is huge, right? And of course, credit risk and using machine learning to build credit risk score, AI to take decisions is really huge. Pricing model point, I really love that aspect of so many data point and building the right set of pricing model. And pricing models itself are complicated, right? For example, there are tons of kinds of pricing model. It can be a quantity related thing, it can be a milestone based thing, then there are discounting layers. And typically, what I've seen is, firms don't optimize their pricing very well enough. They don't take the data or the market intelligence or build kind of learning models based on transactional data or historical data and trying to configure the kind of pricing. And that I feel is a brilliant point in terms of how can you identify your pricing. But yeah, I agree. I mean, we are at very exciting times, and time will say how the AI applications will build in. As you rightly said, At one point of time, BlackBerry was doing really well and it was the go-to, mobile phone. But at a certain point of time, once the Android came in, the smartphones came in from Android perspective, and the market actually went away there, right? So I mean, each team have their own cyclical phase, and time will tell what will be the next phase in the AI applications or maybe AI agents coming in, right? So great. I think love your answer on the applications of AI. So I will move to the last question. I mean, you have seen your journey across from finance manager to finance leadership at enterprises, then finance leadership at startups. So you have seen multiple challenges and multiple journeys. Would love to know what is your advice for finance professionals who are watching the podcast. How should they advance their careers and grow to that coveted finance
Yeah, I
leadership
think I
position?
think look, I mean, my route was different, right? And everybody has their own route. So I can only speak from my vantage point. I benefited from the ecosystems of being part of large companies with very established finance processes, senior leaders who had seen a lot of finance problems themselves and solved a lot of finance problems, learning from them, mentorship, and all those things helped me grow as a professional early on, and then be ready for more entrepreneurial companies. So if you take my
Right,
blueprint, then I would advise people to look out for companies that have strong finance departments, strong, well-known CFOs,
right,
where you can actually go and learn over a period of time, 5 years, 10 years, the actual ropes of how do you do finance, how do you partner with the business, how do you present, how do you tell a story. If you can have a stint in investor relations, please do it. Understand the psyche of Wall Street. If you can go and raise some funds, internal or external, do those, pick up those skills. So those would be my advices. But look, there are many routes, right? People can go into investment banking and they do great stuff. They're great at deal making. So if that is your route, then
right.
that is also a great route. People go to big four accounting firms and they excel in accounting, compliance, controllership, and then they take a different route. And many people don't do what I did. They don't actually go and work in large companies. They directly go to entrepreneurial companies. And that's also a different skill set. Do what your DNA suits you best and also appropriately how it fits with the rest of your life, right? If you're taking too much personal risk very early in your life, it has to pay out very quickly in rewards. And there's all this financial risk and how you take care of families and everything. So it's not a very easy answer. At the end of the day, enjoy your work. Remember that finance doesn't produce anything. It's not a business. You are there to support the business. If you can enable the business, you're going to be
Right.
very, very successful. You cannot miss out on details. You have to be very deep into the details and then be a good storyteller. I think those are 4 or 5 things I would urge any finance person, no matter where he ends up, investment banking or large corporations or small corporations. I think that would be a few things I would urge people to focus on.
Got it. Great, Subodh. I think had great time. I don't know how time passed in the podcast. We have spoken a lot of things. It was
Likewise.
great speaking with you. And thanks everybody for joining in the podcast. And I hope that you had a good time listening to us. So thanks Subodh for joining us and making the podcast really, really
Thank you, Amar.
fascinating
Take
for all
care.
of us. Thanks Subodh. Take care.